Hello everyone, I'm Kunal Sodhani and I'm here once again from Shinhan Bank India, taking you to the global cues and making you understand, the bifurcation of what exactly is happening between the global macros and what exactly are their impact on the various currency pairs. So talking about the domestic factors as we always do, if we talk about the FPI flows for the month of January, they have been quite positive with the equities having around 6,500 crores of inflows. While if we talk about debt, the inflows are around 5,600 crores. On the other hand, if these are so healthy FPI positive numbers, if we are witnessing, on the other hand, it's also being clearly witnessed that the FX reserves for India have been also on the rise. So there is definitely a connect, which I see. So the FX reserves now are standing at around $623 billion roughly as on December 29th data. And what we foresee and what we also understand that the inflows which we have been accumulating have been, clearly taken by the central bank in order to build up the FX reserves. The all-time high numbers of around $645 billion may be tested soon. That's what we believe. And it's also good that in terms of any kind of uncertainties, we are really prepared when it comes to FX reserves. If we talk about globally, what exactly happened and what kind of movement we are seeing on dollar index. So first, we had three important data points, which was one non-farm payrolls data, NFP, which we normally know with, came at much higher than expected number of around 216,000. On the other hand, if we talk about the average hourly wages, they came at 4.1% versus 4%. And if we also talk about the unemployment rate, they came in at 3.7% versus the expectation of 3.8%. So all three data have been quite positive. Now, what kind of an impact did we see? We saw dollar index rallying almost towards 103.10 levels. We also saw 10-year US Treasury yields moving towards 4.07, 4.08 levels. And why did it happen? When data was good, it happened because now the expectation with the market had of around 5 to 6 cuts for the year 2024 have smoothened down. Because if the data points are good, does Fed needs to be so aggressive with rate cuts is a question. Now, these questions are also being raised by several Fed officials, where there is a mix of voices coming from all over, where some still feel that the rate hike trajectory is still not done, and some feel that be a bit dovish and the rate cuts may happen, but 3 to 4 rate cuts and not 6 or 5 rate cuts, which are expected. So when this happens, the odds as per the Fed fund futures have also cooled off to around 56% of a rate cut in the month of March from as high as 90%, or we can say as good as 100%. So that has lowered off, and thus we have seen an impact on several currency pairs. But if we talk about euro dollar pair, it's still consolidating between 1.09 and 1.10 levels. If we talk about GBP dollar, that is pound, that has rallied towards 1.2760 levels, where these are decent enough levels, for a trader to short with a stop loss of 1.2860. These are again personal views, which are restricting to it. If we talk about dollar JPY, 142, 145 remains a broader band. Either break of the ways can define a new trend, but I think it's still more of a sell on rise kind of a scenario when it comes to dollar yen also at this point in time. Uh, Purely talking about dollar rupee, we have seen dollar rupee touching almost near 83 levels recently now. And on the higher side, we have seen levels of 83.35. So this broader consolidation is continuing, but sell on rise is still remaining on the dollar rupee pair, considering the way macros, both on domestic as well as on the global perspectives, are behaving. Overall, we expect 82.80 to be tested. And on the right side, 83.35 remains a very important resistance. For an exporter, we definitely recommend them to hedge anywhere between 83.20 to 83.40 levels if we are able to see those levels. On the lower end, for an importers, we would just want to wait to see if we are able to break that 83 handle convincingly. If yes, then around 83.70 to 80, my bad, 82.70 to 82.90 could be a level where the importers can start their hedging as well. So that's all from my side, friends. Wishing you all a very happy and energetic week ahead. Thank you so much.